Hi, welcome back to Raymond Lee Jewelers web series. I'm Liz, and today I'll be explaining how the price of gold is determined. First, it is important to understand a few things about the nature of gold. Gold's prices are based on units of troy ounces, pennyweights, and grams. There are 20 pennyweights to an ounce and 1.555 grams to 1 pennyweight. There are 30 grams per ounce. Gold, like any other asset, is extremely vulnerable to the socio-cultural events that affect the markets. However, gold is a commodity that is not meant purely for consumption. It is meant to be acquired thanks to its considerable long-term value. Gold will never go bad. It won't suddenly lose its value. It's the ultimate non-perishable item. Nearly all of the gold mined throughout history is still in existence today, and gold from the 8th century is no less valuable than gold mined in the 20th century. The fluctuations of gold in the market are therefore determined by outside factors. The value of the dollar. To phrase this simply, when the dollar gets strong, the gold price goes down. When the dollar weakens, the price of gold goes up. The global economic climate. Because the shifting of currency value can cause uncertainty in the market, investors will turn to gold as a reliable, safe form of currency, causing a spike in gold prices, much like the recent prices we've seen in the markets lately. Genuine demand. Gold's intrinsic value is due to its beauty and usefulness. The latter means that gold is prized for its physical and chemical properties, making it useful in medical, dental, engineering, and industrial purposes. Gold's beauty is best exemplified by its prominence in jewelry, which accounts for 2/3 of the annual gold demand. Central bank reserves. Central banks use gold as reserves for insurance against their clients' money. These banks, therefore, hold a majority of the world's gold supply. Because these banks have such an enormous amount of the world's wealth stored in their reserves, they play a large role in determining the price of gold. Essentially, the price of gold around the world fluctuates with large, central bank size of reserves. Fear and uncertainty. The final factor that influences gold prices is fear of uncertainty. In times of national emergency, gold often becomes highly valuable as people fear for the value of their currency, assets, and the stability of their country. Once these factors are taken into account, an organization called the London Gold Pool convenes twice daily to perform a process called gold fixing. This group is made up of 5 trading firms who make up the London bullion market: Barclays Capital, Deutsche Bank, HSBC, Scotia Mocatta, and Societe Generale. Today's gold prices can be readily found with a simple internet search. Raymond Lee Jewelers monitors Kitco's gold prices to determine how much we'll pay for scrap gold, gold coins, and gold jewelry. I hope this installment of our web series sheds some light on the hows and whys of gold prices. And we'll see you next week for another episode.